영상이 시작되기 전에 먼저 등장할 5개의 문장을 보여드릴게요. 빈칸에 들어갈 표현을 유추해보세요. 단어 하나하나를 직역하지 않고 전체 의미에 맞게 의역하고자 노력합니다. 그게 바로 영어식 사고의 출발이에요. 그럼 시작해볼까요?
Gold often acts as this barometer. Gold prices were really depressed then. Central banks were pumping liquidity in the markets. Gold, historically, holds its value against inflation. Keep your eyes peeled for those policy pivots.
Welcome to Magic of Listening. Our goal here is simple. Help you, as intermediate English speakers interested in finance and economics, keep your listening skills sharp. We aim for content that's insightful, structured, but, easier to follow than typical news broadcasts. Today, we are diving into something huge, a topic really dominating the headlines in 2025. The historic run we're seeing in gold prices. We've got sources tracking its journey basically from being seen as a sleepy asset to its current all-time highs, pushing close to $3,900 an ounce.
Yeah, it's fascinating. Gold often acts as this barometer, doesn't it? Gauging global fear, global confidence. But what's really interesting now, and maybe different, is why it's surging. Past rallies, mostly panic-driven. This time feels fundamentally different. To really get it, we probably need to quickly walk through that history just to see the contrast.
Right, let's do that. Let's start with what you called the old story. So after the dot-com bust, and especially after the UK's big gold sale, between 99 and 2002, gold prices were really depressed then. For professionals starting out around that time, sleepy asset, sounds about right. Slow, kind of irrelevant.
Absolutely.
Yeah.
That view just evaporated in 2008. The global financial crisis hit, banks were collapsing, stock markets basically halved, and suddenly gold soared past $1,000 an ounce for the first time ever. I remember living through that. It felt like the whole financial system's floor just dropped out. And gold was, for many people, literally the only thing they trusted.
Wow, a defining moment.
Definitely. And that momentum, that confidence, it carried into 2011. Remember the Eurozone debt crisis? Huge stress there.
Right.
Gold prices climbed past $1,900 then.
Yeah.
That spike, that was pure global anxiety. Worry about fragile banks, governments defaulting.
Okay. But then came that frustrating period, 2012 to maybe 2018. Gold just drifted, right? Below $1,300. People started dismissing it again, like a crisis relic, while stocks were booming thanks to QE, quantitative easing.
Exactly. Central banks were pumping liquidity in the markets, keeping volatility low, making gold look boring again.
But then COVID-19 sort of reopened the whole story, didn't it? 2020 hits, central banks slash rates to zero, printing, massive amounts of money, and gold just blasted through its old ceiling, went above $2,000.
When uncertainty spikes and there's a real risk of currency devaluation, gold tends to come roaring back.
Okay, so that brings us pretty much up to date.
Right, but here's where it gets really interesting. Today, with gold up near $3,800, $3,900, the sources are saying this rally isn't just driven by fear like before, it's driven by a mix of things, crucially by structural, sort of long-term strategic demand. That's what's different this time.
The structural demand. Okay, and a big part of that story is central bank buying, isn't it? We're seeing reports of massive buying, especially from nations in Asia, the Middle East.
Exactly. And this isn't just simple inflation hedging. It's a very deliberate de-risking move. They're buying gold aggressively. Why? Well, partly to diversify away from the U.S. dollar, sure, but maybe more importantly, to hold a physical asset that's outside the Western banking system, outside potential seizure, It's basically an explicit vote of, let's say, caution on global political stability and the existing financial setup.
Wait a minute. So if the world's central banks are actively trying to hold less dollar exposure, isn't that a huge signal, a massive shift in trust regarding the current financial plumbing? That sounds like something really important for you, the listener, to notice.
Absolutely. It's a powerful signal. And compounding that, adding to the pressure, is the issue of just staggeringly high government debt levels pretty much everywhere.
Yeah.
This makes something called financial repression a very likely path forward for many countries.
Okay, financial repression. Can you break that down for us quickly? What does that actually mean?
Sure. Financial repression is basically when governments and central banks work together, sometimes subtly, sometimes not so subtly, to keep interest rates artificially low, below the rate of inflation, even while inflation might be running quite hot.
Right. So rates are low, but prices are rising fast.
Exactly. And what that does, it effectively punishes savers and bondholders. Your money, your capital, it's losing purchasing power rapidly. In that kind of scenario, suddenly an asset like gold, which doesn't yield anything but historically holds its value against inflation, well, it starts to look incredibly appealing, especially when holding government bonds becomes almost a guaranteed way to lose wealth in real terms.
Got it. Okay. So pulling this all together, what does this mean for you, our listener? History taught us that fear makes gold jump. But today's rally, it seems to be telling a different story. More structural changes underpinning its value now.
I think that's the key takeaway. The long-term potential for gold looks strong because of these deeper structural issues like debt and central bank strategy. But, and this is important, corrections are always possible. It's never a story of endless straight-line gains. You absolutely have to keep an eye on the broader economic picture.
Right. Which leads us to a final critical question for you to think about. If this current rally is heavily influenced by things like financial repression and central bank diversification, what specific forces, maybe beyond just everyday fear, do you think will really dictate where gold goes over the next year or so? Our sources seem to really stress watching the bond markets and central bank policy choices. Keep your eyes peeled for those policy pivots.
영어와 시사경제 두 마리 토끼를 한 번에 잡는 알찬 시간 되셨다면 구독과 좋아요를 꾹 눌러주세요. 감사합니다.